This video is brought to you by Passport, the Bitcoin hardware wallet you already know how to use. Stay tuned to the video to learn more. Welcome back to the Bitcoin Layer. Today, we are joined by a very special guest, our TBL Legal Correspondent, and of course, partner at Amundsen Davis, Joe Carlasare, to talk about everything going on the legal front when it comes to Bitcoin and crypto more broadly, and also a little bit of macro. Joe, how's it going today?
It's going great. Thanks for having me on. And I could not be more excited to chat both with the legal side, but also macro. Crazy day in markets here today.
To say the very least, it's March 31st, quarterly rebalancing, crazy stuff going on. And of course, no shortage of things to talk about at all, either on the macro or the legal front. So always a pleasure to have you on. I'm really excited for this one. Our viewers will know, that very, very recently there has been this slew following 2022 of lawsuits towards these crypto firms and also firms that offer Bitcoin services. A lot of this is coming in the wake of what happened in 2022, and many perceive the harsh regulatory crackdown that's occurring now as sort of these regulatory agencies trying to save face after what occurred in 2022. Talk to us about what you see going on right now from the legal side of things. We know Binance is being sued. We know several other individuals and crypto agencies are being sued, whether it's by the CFTC or SEC. So walk us through some of the big hitters right now.
Yeah, that's a long topic. So let's just start with where my overall view of how we got here and where we're headed, right? So first off, Joe, I think you have to look at the current tsunami of enforcement that we're seeing as a direct result, really, of the collapse of FTX. And let me explain why. There was a hope by many on the Hill, many regulators even, that last year there was going to be a hard push to get some sort of omnibus crypto package passed. There was real traction with relevant committees. They were putting forward draft legislation. There was some support from the White House. As you know, the White House had those executive orders where they were studying various aspects of cryptocurrency and its impact on national security and the environment and so forth. And I think all that died with the collapse of FTX. When FTX went down, I think that even the pro-crypto legislators, the voices on the Hill for crypto legislation, they said, we got to step away from this. We've got mud on our face because we were affiliated with SBF, and some of them took campaign contributions, and they said, this isn't going to be something we're going to solve. This is your problem, regulators. This is your problem, enforcement chiefs at CFTC and the SEC. And they said, you guys go handle it. So at that point, there was a clear message, I think, from the Hill to the enforcement agencies. We're taking the gloves off. You guys do what you need to do and move forward with this. Now, many of these cases were under active investigation for months, if not years, before the recent filing. But I think that the reason that you're seeing this final uptick, to your point, in all these filings that have come, is because of the collapse of FTX. And they said, "You're right. We need to get control of this space." So in 2022, at this point, the whole year, I think they charged a total of it was 24 pieces of litigation in the entire year in 2022 in the crypto related sphere. Okay. In the first month so far, they're already at 10. So you can see the pace is rapidly accelerating. And I think the key takeaway I have right here is they have finally realized that one-off actions against minor players, the negotiated settlements and agreements with people like Kim Kardashian, they're going to be insufficient to get control of this space, right? We have to go after the big players. We have to go after the Binances of the world, and we have to go after the Coinbases, and even in coordination with what has been deemed by Nick Carter's Operation Chokepoint 2.0, which we can get into a little bit. I think they realize even some of the on-ramps and banking partners that aren't necessarily engaging in crypto activity, we need to slowly, turn the screw on them to make sure that they effectively are not aiding and abetting these exchanges in their activities. So, ton of stuff to unpack, but that's my overarching view. So, which one do you want to talk about first? What's most interesting?
Absolutely, yeah. So let's talk about what's going on with Binance first and foremost, because obviously it is representative of it's one of the biggest, if not the biggest, global US dollar on-ramp to Bitcoin. So what's going on with them? Why? What regulatory agencies are going after them? What are the likely outcomes of this?
Yeah, absolutely. So there was a suit filed by the CFTC, the Commodity Futures Trading Commission, and you may ask, well, why is CFTC filing this suit as opposed to the SEC or other bodies? And the real answer from that is because they're engaging in swaps, they're engaging in futures, and they're engaging in all these derivatives, which would fall under the CFTC's jurisdiction, not the SEC. Now, keep in mind, they also sell what are purported to be unregistered securities. So nothing about the CFTC suit would prevent some companion suit being filed from the SEC. And as you may recall, frequently there's been this back and forth between CFTC and the SEC about, what is a security, what is a commodity, and each agency, each commission basically has their own incentive to claim something is or is not a commodity or security, right? Because they want to increase the jurisdictional reach of their particular commission. So in this case, there's a line in the complaint against Binance that they're selling futures and derivative products with the underlying being Bitcoin, Litecoin, and Ethereum, which the CFT claims are commodities. Now, again, just because a regulator says something doesn't mean it's true, right? Just because the SEC says XYZ token is a security doesn't mean it is in fact security. Same thing goes with commodity. Just because the CFTC says Ethereum is a commodity or they view Ethereum as a commodity doesn't make it so. There is really only one body, actually, technically there's two, bodies that can declare something to be a security or commodity. Either the Congress can say, with legislation, we believe this is a commodity, we believe this should be treated as a security, or there's another body. You know what that is?
The president himself?
No, the court system. The court system is going to decide these questions: what constitutes an investment contract under applicable securities laws? So investment contract is a broad catch-all, and this is really important to understand if you're analyzing these cases, that outlines a variety of schemes and situations where something could in fact be a security. It's a type of security that Congress wrote into law that's overly broad, and we said we want to have this discretion for the SEC to find situations where they could determine, okay, this scheme that you put together, we don't care what you're labeling it as, we think this is in fact a security. And when you're analyzing it, you have to apply the Howey factors, which most people are familiar with, and a court's going to apply those and make a determination, okay, these people were engaged in the sale or aiding and abetting the sale of an unregistered security. So how does this relate back to Binance? So the CFTC files this suit. They're claiming a whole host of different things. Number one, their allegations are that they're operating an unregistered, unlawful commodity futures trading exchange in the United States. They're soliciting U.S. customers. They have all these allegations about perhaps inappropriate trading on the platform by Binance itself without proper disclosures. But the core of their suit is that they are being permissive in allowing U.S. customers to interact with an exchange that has activity that would fall under CFTC's jurisdiction. And there's been some confusion about this online, but I want to make it abundantly clear that this is not just about the international Binance entity. This also includes the US-based holdings company. In the complaint, throughout the complaint, they talk about really these interesting allegations. I'll read you some of them, but basically they say, listen, this is all just one enterprise. It's a common enterprise.
And if you look on chain, it's actually corroborated. I've looked several times, tweeted out, other people have done research that these entities just swap funds back and forth to one another. It seems more like just a shell company than anything else. It seems like the same company based on how they're moving funds between one another.
Absolutely. And that's at the core. So, for the folks that say, oh, this doesn't really impact Binance US, I think that's a incorrect reading of the case. There's this awesome allegation I want to read for you from the complaint. It's paragraph 81, and it talks about in 2019, CZ and BAM Trading launched Binance US, a digital asset spot trading platform that offers services to US customers. When he hired BAM Trading, CZ described Binance as the pirate ship and explained that he wished for Binance.us to be a Navy boat. I think that's fascinating. Like, just as a little nugget there, that he's describing like, oh, Binance is a pirate operation. You really want to be using that language with U.S. regulators and explaining this connection between the entities. I think it's really problematic for them. And part of the relief, okay, in this suit is they want CZ and any of these affiliate companies to be, number one, barred from operating in the United States. Number two, they want a court order, an injunction that restricts them from ever obtaining registration appropriate to, in fact, be offering products in the United States. So this is an existential threat to Binance, at least in the United States, right? Obviously, they have offshore operations that aren't really touched. But as far as the U.S. goes, this is an existential threat to Binance, in particular, Binance US.
Wow. Crazy stuff going on with them. And they have been a very sketchy entity, not just Binance, but also CZ. I'm not sure if it was included in the actual suit itself, but it's now been revealed that he had over 300 prop trading accounts on the Binance platform with his name. And so not only is a potential for a secondary suit still there, because they as a platform are offering what could be considered by the courts or by Congress to be investment securities, but also they have derivatives that are underlying what could be these unregistered securities. And the CEO of the company is then using prop trading accounts in his name to trade using that insider consumer data. It is levels upon levels of potential suits. And
you went through it and you offered a great summary of sort of like the most alarming things, right? But amazingly, even with that summary you just offered, you neglected to mention perhaps the most alarming thing that should keep CZ and all the Binance folks up at night, which is the Hamas transactions, right? The fact that I don't know if you caught that or how deeply you read in it, but there are allegations, and I'll read from the complaint here, in February 2019, after receiving information on Hamas transactions. That's literally an email that was obtained somehow by CFTC. The compliance officer, Lim, explained to a colleague that terrorists usually send small amounts, as large amounts constitute money laundering. Amazingly, like that they would make that statement and put it in writing. Then it says, he replied, well, you can barely buy an AK-47 with $600. And this is customers, interacting and saying, like, come on, they're here for a crime. Binance is agreed. We see the bad, but we close two eyes. That's a quote from a Binance employee. We see the bad, but we close two eyes. I don't know if that's a translated quote or it sounds like it's translated in English. But man, if I were them, okay, the CFTC suit would be the least of my worries. I would be far more concerned about some potential DOJ action being brought against them.
Absolutely. Well, I suppose it helps CZ in the fact that nobody knows where Binance is even incorporated, or where CZ is currently located. So I suppose that helps. Does it say in these filings where Binance, the company, is incorporated?
Yes, they always have to plead jurisdiction. But so let's just make sure. They plead, obviously, that they interact with U.S. customers, which gives them the jurisdictional hook here. But they say he is the chief officer. They launched Binance from Shanghai, China. And let's see, based on media reports, he currently resides in Dubai, in the UAE.
Wow. And we know how accommodative Dubai is of crypto fraudsters. So potentially that is an ex-ante measure in case Interpol ever goes after him, like Do Kwon, or obviously the 2-3 Arrows Capital founders, who are now probably stuck in Dubai for life, unfortunately. Some of the active cases in courts that are going on currently, I know I read a few headlines, I believe it was a month ago, about active cases having to do with Justin Sun. And within that case that was revolving around Tron and securities offerings, it classified and categorized Ethereum as a security. What are the biggest sort of active court cases right now that are going after not just Ethereum, but certain cryptocurrencies and deeming them as securities? Is there more than one?
Oh, absolutely. So the biggest case I think that everyone is focused on is the SEC versus Ripple suit. That, just to give folks a sort of summary of where that's at, it has gone through discovery. They have, each side has produced a whole plethora of experts claiming all sorts of different conclusions about the price movement of XRP and how it's controlled or not controlled, and expectations of some of the purchasers buying it. I mean, I think there's like 8 or 9 different experts that have been disclosed by the respective parties. And they've also put forward a complete briefing on what's called a motion for summary judgment. Motion for summary judgment is focused on having the court determine, as a matter of law, these cross motions, whether or not XRP and the sales violated securities laws. So that is pending. There's some hope that we might get a ruling on that by June, if not June, July. So we might have some fireworks over the summer on that front. But the key thing to remember, though, is that even if XRP wins, or even if the SEC wins, I would put a lot of money on the fact that this is going up to the appellate court. This will not be a situation where either side just lies down after a ruling on the motion for summary judgment. So it's never really over in the law in our endless appeal system. So don't be surprised if we get a ruling and it makes some adverse determination with respect to XRP, and you see them immediately file an appeal into the appellate court. So that's the big one. We obviously, one of the ones I think is very fascinating is this case, and it's not necessarily brought by a regulator per se, but it's this NBA Top Shots case. Have you heard about this one?
No. Well,
Okay.
actually, yes, I had. This was the trading card one, NFT sort of thing, right?
Yeah, this is the Top Shots. It was filed in the Southern District. It's Friel versus Dapper Labs, and basically it was a private piece of litigation that was filed against Dapper Labs, alleging that the sale of the Top Shots were in fact securities, that they were investment contracts. And to me, the reason why this is so fascinating is because obviously we know that there's regulators out there that can file enforcement actions, right? But they are limited by bandwidth considerations, by budget considerations. They're limited by, really having to pick and choose what cases they're going to prosecute and put forward. That's the SEC, CFTC, and also state attorneys general and other state regulators. They're limited, right? Because there's only so much bandwidth those offices have. But you know what has a lot more bandwidth? People like me, private civil litigators. There's, tens of thousands of us out there that can file these types of suits. And what we see in the Dapper Labs case is we see basically a roadmap to how to file a case and get it past a motion to dismiss. So let me give you some basic civil procedure 101 that's essential for any case in the world. Somebody can always walk out and they can go down to their local courthouse and they can file a complaint. I could file a complaint right now that Joe Consorti, he stole my car and he gave it to an alien, right? Now, the problem is that if I were to file that complaint, you could hire a lawyer very quickly and move to dismiss it. And courts apply what's called a plausibility standard. They require certain notice pleading. All of that's a fancy way of saying, like, the judges have a preliminary determination to see, is this case plausible? Does the plaintiff allege facts that, if true, would entitle them to relief? And in the crazy example I just gave you about an alien, judges would throw that out right away. They'd say, this is just implausible. We're not going to buy this story. There's not enough facts. It's all conclusory. We're done with this case. In the Dapper Labs case, what many hoped would happen is then on the NFT side, the pro NFT side, they would say, Judge, we want you to dismiss this case outright. There's no plausible claim that these NFT sales were in fact securities. Well, what did the judge do? The judge says, well, you make good arguments. There's an argument that these things aren't investment contracts. They're not securities. However, I'm not prepared at the pleading stage, at the initial presentment of this complaint. I'm not prepared to dismiss the suit. I'm going to let it go forward. Now, Joe, that is extremely significant, okay? Because anybody who follows litigation knows that once you get past a motion to dismiss, you have discovery. Discovery is extremely expensive for a lot of folks, particularly people launching these tokens, and they're going to spend a lot of money defending civil litigators if they can't kill the case with a motion to dismiss. So for my purposes, I think the Dapper Labs case is fascinating because if courts continue to apply a liberal standard and they let cases move forward and they don't dismiss them right off the bat with a motion to dismiss, that means that plaintiffs' lawyers are going to increasingly become pretty bullish, right, about filing suits, going after these honeypots of money that made all these, all this huge millions and millions of dollars off NFTs and other projects. And they're going to say, we're bringing private civil enforcement actions, regardless of what CFTC and SEC does.
And so through this NBA suit going forward through to discovery, that sort of sets the precedent that, oh boy, right, the courts are in favor of going after, all of these NFTs. And while it may not be these big cases versus companies like Ripple and et cetera, that basically sets the precedent that, like, look, the floodgates are open. Go sue your heart out for all of these, like you said, honeypots, and it's a fantastic term to describe them, that really raked in all this investor cash over the last 2-3 years, however long it was.
Well, they don't have to be small cases, right? Like, one of the scariest things for any corporate counsel that we advise many of them and talk to them, what keeps them up at night is not necessarily a one-off, like one guy bought an NFT and he suffered a loss. That's kind of an isolated thing. What keeps a lot of general counsels up at night is class actions, right? Class action suits where you combine together a whole big pool of plaintiffs and you bring these actions and you have to pay massive judgments, okay? To give you an example of this, you may have heard about the Facebook biometric privacy case. It's one of the biggest, where they were gathering biometric data and they had to pay a huge judgment to thousands and thousands of plaintiffs. If you are able to advance those types of cause of action, and it's a big if, it's hotly debated, but if you can get those moving forward slowly and steadily, you might see increasingly private attorneys fill the role and come to the aid of the regulators who can't bring all these actions on their own. And I'll give you a perfect example, okay? Right now with the Binance suit, we have a CFTC allegation that they had these 300 prop accounts, right? They called them house accounts that they used to trade, right? And I tweeted about this, like, if you're out there and you suffered significant losses, I anticipate you're going to see attorneys representing some of these folks filing suits against entities, exchanges, et cetera, because of the way in which they were trading against customers. And again, you don't need to prove the allegations at a pleading stage. You get discovery. You get to take people's depositions. You get documents. You get records. All you have to do is have a plausible claim and be able to state allegations that are specific to support that claim. So it's a pretty lenient standard. And if you continue to see bad actors in the space, you will continue to see a ramp up of private enforcement.
And if there's anything that's certain about crypto, is that there's absolutely no shortage of bad actors. When one dies, two more take its place. Absolutely fascinating stuff. And I suppose my same question goes for the Ripple suit, right? Should we get a decision here, and even if it does end up being appealed, does that set the precedent that that crypto more broadly, right? If there's a company that issued a token and it has control to some degree with that token, does that set the precedent that crypto more broadly is a slew of securities, and does that sort of open the door for more lawsuits to come for even larger things like Ethereum, I suppose?
Yeah, absolutely. We'll put Ethereum for aside because there's some special issues, but the takeaway, I think, from our securities law is that it is fact specific. Okay, and I really want to bold and underline that if you're taking notes. Securities laws are fact specific, meaning that each and every circumstance you have a situation where something could or could not be a security based on what actually transpired. And let me give you an example. Many in the Bitcoin circles, and we're on the Bitcoin layer here, they say, well, Bitcoin's not a security. Yes, that's true, right? But if Joe Consorti is operating an exchange and he says, give me your Bitcoin, I'll loan it out to other people and I will pay you yield, suddenly that transaction with
That's
a
an
commodity
investment contract. Yep.
Right. That's an investment contract. That is, you have a reasonable expectation of profit based on Joe's ability to identify people to lend the Bitcoin to. So even though the underlying instrumentality, the underlying vehicle of Bitcoin is not a security. It doesn't mean the transaction you entered into was in fact a security. So what do you have? You've got all these exchanges are doing these, or many of them are offering these yield products, right? Which is going to raise concerns about securities. But then they're also aiding and abetting the sale of these things themselves. So arguably that also falls under a Section 5 violation, that they're aiding and abetting the sale of an unregistered security. So you've got many different ways you can pull at this thread here, where you could say, okay, this activity in particular is lawful, this one is not. And I think it's going to be case by case basis. And I think the misconception out in the Bitcoin space is that Gary Gensler can stand up like a white knight and just say, all of this is a security. And it is. And the reality is that's not how the laws work. If he believes something is a security, he has to go file a suit. He has to go through the discovery process, and he has to get a judge to agree with him. Or, not him, but his deputies. You know what I mean? The people at the SEC have to file the suit, and they have to get that judgment. That is really onerous, right? That means that they, with 10,000 different tokens, they have to go after 10,000 different developers that have put these things in the market. So what I think they're slowly and steadily realizing is that we can't go after every single project. We have to go after the choke points, right? We have to go after the exchanges, the on-ramps, the liquidity providers, the main sources where these things get listed. And I was reading something from a really good, I don't know if I thought we were going to get into it at some point, but there was a fascinating summary that was offered by really one of the white shoe firms in DC that provide like a basis of all the different pieces of banking regulations and enforcement actions that are being brought right now. I forget the firm's name, but it's a preeminent firm that was just put forward, and they summarized the coordinated effort. Okay, there it is, Cooper and Kirk. A coordinated effort by regulators to really drive businesses out of the financial system, the crypto businesses. They're losing bank accounts, they're losing access to ACH networks with no explanation. Their banking partners are just saying, sorry, we can't do business with you. Mm-hmm. They are even having personal accounts of employees who work at crypto funds, including crypto hedge funds, saying, hey, my personal bank accounts are being shut down. So all of this is sort of a coordinated effort to, I believe, to try to clamp down on this industry in the wake of FTX's blow up.
It certainly seems like it. Now, if you can, explain to the viewers what Operation Chokepoint, the first one, was. Obviously during the Obama administration, right? If you can't necessarily change the laws, then you could go out about it in a very roundabout way and sort of cut it off at the source, right? And we're sort of seeing the exact same thing here now. If it takes long, if it's a long process for the relevant regulatory agencies to actually go after these one by one in the courts, you could just cut off the dollar on-ramps.
Yeah, and that's it, really. The original Operation Chokepoint, it really was sort of an informal initiative by the DOJ and other regulators. I think it was 2012 or 2013. And they were effectively all these activities that were deemed to be inappropriate or not politically correct. The payday lenders, the firearms dealers, high risks of fraud, those sorts of things. They would basically try to put the screws on the banks and their on-ramps and off-ramps that were engaging and supporting those industries. There was some with the cannabis industry that was part of this, other sort of, I would say not the most favorable, most favored activities. Okay, it was an overarching idea to say these unfavored activities that we don't support for political reasons, we're not going to go after you directly. We're going to go after you through intermediaries that are supporting and allowing your activity to continue.
We're going to take a quick break to hear from our sponsor, Foundation Devices. Passport is the Bitcoin hardware wallet that you already know how to use. With a gorgeous design and familiar interface, Passport makes it easier than ever to self-custody your Bitcoin. Take a look. This is an absolutely beautiful device. No more sitting at your computer or squinting at tiny screens. Passport, this small device that fits in the palm of your hand right here, it seamlessly connects to your phone and empowers you to quickly view your balances and move Bitcoin into and out of cold storage. And today we're offering a special deal. You can use the code BitcoinLayer for $10 off your own Passport when you receive checkout, or you can go to the link in our description to learn more. Now, back to the video. Tremendous summary about what is going on from the legal perspective. Again, there's always so much developing here, and so the
We haven't
viewers,
even talked about Coinbase and the Wells notice.
we haven't. Let's review that because that was making headlines early last week. Let's discuss first and foremost. Explain to the viewers what a Wells notice is and why Coinbase was served one.
Sure. So a Wells notice is a informal. Well, it's formal, but it's not a formal piece of litigation. It's a formal notice from the SEC of a potential securities violation and the potential recommendation that is coming for an enforcement action. So it's kind of like a pre-suit letter, basically saying, our enforcement division has done a thorough investigation and we are going to recommend some enforcement action against you. But out of fairness to you, we're going to let you make what's called a Wells submission. And a Wells submission is a process whereby Coinbase can voluntarily, if they so choose, submit their position. So the idea is that when a department at the SEC, the enforcement division, is doing a review, they're going to conduct their thorough review independent of, in many ways, Coinbase. They may ask them for comment. They may ask them for their position. They may ask them for supporting documents. But at the end of the day, they're going to come down. They're going to make a recommendation to their superiors should we file a piece of litigation. Okay. So before they make that recommendation to their superiors, they issue the Wells notice to the target of their enforcement. And they say, we're going to recommend this. We want you to make a submission. So then if Coinbase, for example, chose to make a Wells submission, then the superiors of the SEC, they get the enforcement division's whole summary of recommendations and why they think certain cause of action should be asserted for securities violations. They also get the other side of the story from Coinbase, and then they have to rubber stamp it in most cases, say, yep, you're going forward, you're going to file a piece of litigation. So I can tell you many people think that a Wells notice is mostly a formality, that their mind is made up, that they're going to be filing a suit. It's just a question of when, not if. But they do, out of fundamental fairness, want the other side's story, just in case maybe they're perhaps they missed something or they're not considering something fully.
Got it. So it's sort of a pre-lawsuit notice within which there's a chance for a rebuttal that could remove the possibility of a lawsuit if something was missed.
Correct.
Got it. Okay. And has the Wells notice itself, like, have the details emerged? Do we know exactly what Coinbase is being? Obviously, we know that its investment offerings probably fall under that category, but do we know specifically for what product it was?
No, that's a great question. There's some suggestion that it may, based on some of the verbiage they use, may relate to their staking activities. That is the supposition. However, it's possible that it's more broad, that it could relate to some of the securities in general on their platform. I mean, obviously, Gary Gensler has been all out there saying, out there on numerous occasions saying, when we look at these exchanges, the vast majority of the things trading on these are securities. So, I would be surprised if the suit that's filed against Coinbase, because I do think one is coming, put me down as predicting that. I would be surprised if the suit only relates to staking activities. If it only relates to staking activities of various tokens, I think that's going to be an enormous sigh of relief for Coinbase. If it's broader than that and it relates to things like the tokens they're listing and some of the activities that beyond staking on their platform, the trading in general of these tokens, that is going to be really problematic. That's going to be also an existential threat to Coinbase. And you're going to have all these sort of mini cases, right? You're going to have cases within a case about all these various different tokens and what was the pitch of the token and why did they list it and what was their criteria for listing the various tokens and how decentralized each token is and what expectations of profit. I mean, think about it. If they were to truly pursue this case and go after every token that could potentially be a security, you'd have, I don't know how many tokens are on Coinbase these days, like dozens of cases within cases.
Yeah. Yeah, no, and that would take decades to say the very least. So I suppose it is much more efficient to just cut off access to US dollar on and off ramps rather than pursuing it, the more formal way.
Yes. So
Remarkable.
that's another one to watch. Obviously, we were going to get to the Justin Sun complaint as well, right?
Yes,
Did
yeah.
you see that?
Let's talk about that, and of course any other sort of major legal action that's happening in the crypto space.
Right. So just before we get to Justin Sun, put me down as someone that is a strong believer in the fact that although the CFTC jumped the gun and they were the first to the courthouse door with their complaint against Binance, I would be shocked if there isn't a case this year against Binance by the SEC as well. And although I'm not as convinced, I think it's a better than 50% chance you may also get a DOJ action against Binance as well for some of the reasons we
Triple
talked about
threat.
earlier.
That's remarkable. Binance's legal team is going to be certainly strapped. I hope they're paid well.
Yes. But we were going to get to a suit that was filed on the 22nd against Justin Sun and his companies for fraud and securities violation. I think the fascinating part about this is that they went a little bit further than just the Securities Act and added these counts in here for various claims of fraud, which are interesting. Not surprising, right? But definitely something that I think many in the crypto space were anticipating at some point. But I think the idea is, I'll read you as the first sentence, that this action arises from Justin Sun's orchestration of an unregistered offer, sale, manipulative trading, and unlawful touting of crypto asset securities. So it's a broad suit. It engages in a whole variety of activities and businesses that he's involved with. And they allege that he worked through multiple companies to pump, to manipulate, to sell the following assets: XRT, that's Tron, and BTT, beginning in 2017 and continuing through the current day. He's distributed billions of these tokens to the public while creating active secondary markets on them, which can be manipulated in trading. So he's on both sides, right? Not only are they saying you sold this thing that is an unregistered security, but you also intervene in the spot markets and develop those markets and pump those markets so you could unload your bags.
Oy vey, oy vey. It sounds a lot like what some of the shady behavior that we see going on behind the scenes at Binance as well. And so for that reason, Joe, you've convinced me. You can also mark me down that we're going to see an SEC and potentially DOJ action for Binance as well.
Yeah, absolutely.
Totally wild. Totally wild. Is there anything that we should keep our ear to the ground for? Maybe stuff that you're watching that hasn't hit the headlines yet. I know there's certain things that you can't talk about from active cases that you're working on, but is there anything that our viewers should be on the lookout for, in the coming weeks and months, when it comes to lawsuits in the crypto space?
Yes. So we already mentioned the Coinbase Wells notice. I think it's a done deal. At some point, there's going to be a case. I mean, even their general counsel said, we look forward to our day in court to fight this issue. So I will tell you this: if you are a major crypto exchange in the United States, I would expect you to, at some point, face some enforcement action. And it can be this year, it can be next. I don't pretend to know the exact timing, but I would be surprised if they're going to do selective enforcement. And the interesting thing to me is that, correct me if I'm wrong here, because you may know the answer to this, but my understanding is that virtually every major broker-dealer, every major crypto exchange in the United States, they all deal in tokens that are other than Bitcoin, right? There
Correct.
isn't a single one I know that is truly Bitcoin only. There may be some brokers that, using another platform, I'm not going to name names, but using another platform, they may, offer only Bitcoin services, but the underlying actual exchange is in fact multi-token. And because of that, I don't see a situation where the SEC is going to pick favorites, right? They're going to probably, go after a variety of them or none of them, right? If the SEC is going to go after Coinbase, I would expect other major exchanges to face similar scrutiny. That's just my view, okay? And just because you haven't heard of it, there could be a variety of different reasons why that their investigation needs more time to complete before they're ready to go charge off and file a lawsuit. So don't think that the fact that you haven't heard about anything doesn't mean it's coming. But obviously, I think that is a critical. It's going to change the landscape of the space. These suits are going to be all consuming. They're going to be existential threats, like I said. But the other thing to remember on the flip side is that litigation takes a long, long time, right? Joe, do you happen to know off the top of your head when SEC versus Ripple was filed?
2017.
No. It was. But actually, to your point, the SEC versus Ripple was we know now was being investigated way back when. I think it was 2018. They started the investigation, and during the course of 2018, 2019, they are engaging in tolling agreements where they basically said, we're not going to file suit because we're still investigating it, but the statute of limitations is coming, so we want to toll the agreement by agreement of the parties to not have the statute run. And you can do that. That's very common in litigation, just saying we're agreeing to try to continue to negotiate this. But to answer the question I posed to you, the original suit by the SEC against Ripple was filed in December of 2020. We do not have motions for summary judgment ruled upon, right? Assuming we get a ruling sometime this summer or even in the beginning of the fall, okay? What I just told you is that you can expect that to be appealed, right? The appellate process can take 6 months to a year or more, right? So you're not going to have firm determination on that one case until likely, I would say, 2024 at this point. So that's over 3 years, and you still don't have finality. You still don't have a conclusion on that case. So for suits that are filed against Coinbase or other major exchanges, don't expect that you're going to have a quick resolution of those things within 6 months or 3 months, unless there's some bizarre settlement where the SEC says, just pay a fine and be done with it. I would bet against that. But what I think you should notice is that if there is a broker deal that can be made where maybe the exchanges say something like, well, we're going to delist tokens you want us to, but we're not going to delist all of them, that might be their best case scenario. Because if you get involved in long, protracted litigation, you have this cloud above you. It's very difficult to operate as a business in the long run, at least in the United States.
So for Coinbase, with that last sentence in mind, would the path of least resistance, rather than going through the motions and trying to justify some of the things that it has on its exchange that could be considered securities and are included in the suit, just removing those securities from its exchange outright, is that a possibility?
Absolutely. And I know that there's a lot of people in the Bitcoin sphere that have critical things to say about Coinbase, but to their credit, they did go out of their way, at least according to their general counsel, to ask the SEC on numerous occasions, tell us what we're doing wrong. Tell us what tokens on this platform you think are securities that are investment contracts. And they kind of were rebuked, right? They weren't given clear guidance. And I think that's what they wanted all along. I mean, now to play devil's advocate on the other side, there have been actions that have been filed by the SEC for insider trading on Coinbase. I don't know if you've heard about that suit. That remains pending. They last July they filed suit against the Coinbase manager and two others for inside trading. And in that suit, there was, I think, approximately a dozen different assets. The SEC took the position that those were securities. So if you're Coinbase's general counsel and you are aware that the SEC has taken a formal position in court that multiple assets in your platform are securities, what should you do? If it were me, okay, and not giving any legal advice for free to Coinbase, but hypothetically, I would say delist those, right? Because they've taken a formal position in court that these things are securities. Don't keep trading them. And if you recall, Joe, when the SEC filed the suit against Ripple Labs, what did most major UX exchanges do with XRP?
Delisted.
Yeah, exactly. So what changed? Okay, what changed from 2020, where the exchanges were sort of informally respecting the SEC's written guidance on this, to 2023, or in 2022, where now that you have the SEC saying things are specifically securities in court filings and pleadings, and you're just ignoring it and just continuing to allow these things to proliferate on your platform. I think that's a mistake personally, but I understand why they're fighting for it. They are they're true believers that they should be able to have the ability to list all these things and that they're not securities. So I don't begrudge them their day in court.
Absolutely. Fascinating. And to say the very least, lawyers will have their hands full when it comes to crypto. I know you are a very, very busy man, Joe, and we'll keep you for a few more minutes. I want to get your take on what's happening in macro. It's remarkable, and I've said this many times, how you are an active commercial litigator. You have such great markets acumen that I certainly respect a whole lot. What's your take on the path forward for the real economy, and for, I suppose, Fed policy? You were on our Twitter space 2 weeks ago, or last week, I believe, on Wednesday, when Powell shifted a whole bunch of language. The statement itself was changed. In the days since, we've heard several Fed speakers come out and sort of iterate that terminal may be nearing not the word pause hasn't been explicitly used, but 25 basis point rate increase in May seems reasonable, is some of the phrasing that's been used. What's your take on what's happening here? I saw that you were short twos for a while. I don't know if you're still in that trade, but
No, I'm out. But I made some money there. Take your bunts and singles, right? That's the market we're in. For
very
me.
well done. Very well done, by the way. You timed that well.
Yeah, thank you. No, I mean, here's the thing. So I always like to try to figure out what the overarching narrative is in the market right now, and how far removed that is from the facts on the ground. Okay. So you had the Silicon Valley blow up. You had the Signature Bank go down. You had general unease and fear in the banking system. And I'm looking at these banks. They're still sort of hovering, the regional banks, like the stock prices, the equity prices, still hovering near the lows. I think that the bond market right now is a little unsure what to make of that. If that is truly contained, I think there's been some encouraging signs with a little bit less usage of the BTFP that was rolled out. And I think that some people think, oh, it's all quiet right now. But I do think there's a little bit unease in the bond market right now. You're seeing that in the prices of bonds because they don't know what to make of that. However, okay, if you're at this point right now and you have the Fed saying very clearly, Joe, no cuts on the horizon. We don't anticipate any cuts this year. We actually anticipate at least, some further potential policy firming, I think is the word they're using, right?
Yep.
Which can be interpreted to mean either holding steady or potentially a modest, de minimis, like 25 basis point hike. If that is the case, one of two things is true. Either the whole system right now is ready to fall off a cliff, and you're going to have a significant systemic risk that will force the Fed, for financial stability reasons, to pivot. Okay. Or alternatively, the bond market is horribly mispriced. And I will tell you that I lean towards the latter right now. I think that the economic data we're seeing overall, you can characterize it as sort of weakening, but not yet alarming. And until you get it to be truly alarming, until you see a rapid increase in unemployment, which I don't particularly think you're going to see until perhaps the second half of this year. I could be wrong on that, but just right now, the data we have doesn't show it's coming in the next month or two. And if you don't see that, or you don't see something systemic forcing their hand at moving their monetary policy targets, I don't know why the bonds are priced where they're at right now. I can't really figure it out. I think it is and I'd be interested in your thoughts on it. It seems to be mispriced. It seems to be, though, like this understanding that, all hell's about to break loose. And I don't think you see that in the data. And if that is the case, then I think bonds need to sell off, particularly the twos need to sell off. They may not go back to north of 5%, but you might get them back closer to 4.5%, 4.6%, and that should weigh down equity prices theoretically. Although the equity markets doesn't seem to care about anything these days. I was just looking at the NASDAQ, and it's on a rage.
It's officially in a new bull market.
Yeah, I mean it's crazy. But again, my view is that the equity market provides very little signal, if any, for the real economy. So I don't really put a whole lot of stock in what the equity market's telling me. So I think those are the two scenarios. Either something massive is about to break, which again, I discount. I don't really think that's the case. I think you've got this coordinated, targeted approaches by the Fed where they're going to put financial stability over here and try to take care of it. And I think you use this analogy of using 10 fingers and 10 toes to put up all the, put a plug in anything that starts to erupt. I think that's the base case that I have. And then at the same time, I expect them to continue to at least remaining firm with the current rates, if not increasing them, and being very, very strong and steadfast about inflation. And if that's the case, then, we're in for a very choppy sort of muddling through type year, in my view.
Absolutely. And I definitely align with the idea that there was, and this is, well known, that the action in rates has been historic, right? Since 1987, you've never seen that dramatic of a fall in the 2-year yield in a single day as of 3 weeks ago. What happened 3 weeks ago? And so clearly the bond market, at least it thinks it sees something that will warrant more easy monetary policy, like imminently on the horizon. That's what you would infer from this kind of price action. But by the same token, like you said, the data doesn't bear that out. If you were looking at like imminent credit stress that's quickly making its way to businesses and quickly making its way to consumers, you'd see much more turmoil than is currently priced in. You'd see spreads blowing out for investment grade and high yield borrowers. You don't see that. You would see, despite these emergency lending facilities being created by the Fed, you would see not only them rising in usage week after week, which they haven't been. BTFP has been rising marginally, but flat. The discount window has been falling, but you'd also see interbank stress flying through the roof. Whether you're, taking a look at, I suppose, cross-currency basis swaps, things like FRA OIS to judge that, and you're not seeing that. So the rates market has this huge reaction, and now it seems like it may have been over its skis a little bit in terms of expecting imminent cuts, right? I think that was mostly knee-jerk reaction because the data doesn't really bear that out. It doesn't bear out, like you said, it doesn't bear out that there's imminent economic Armageddon that will force cuts. And I'm leaning more into the camp that the Fed has created these facilities, the fact that their usage is dropping week on week and that their balance sheet is now, it was increasing, but now it's reducing. It shows that this stress is still in the banking system and is still elevated, but there isn't this mad dash anymore. Like the facilities and the Fed speak saying, we've got you, banks, is working and is doing its job in lowering that fear. And, obviously I do anticipate a slowdown in credit creation over the course of the next 6 to 9 months and eventually a recession later this year. But, no imminent Armageddon that would warrant a shift in policy. The Fed has these facilities in place. It is clearly, based on how they're being used, calmed investor sentiment. And therefore, it's giving the Fed the ability to keep its policy rate elevated, whether it pauses here or raises one more just for posterity's sake, and allow that tight policy to eventually flow through to businesses and the consumer and bring down inflation, which is what it's been trying to do this entire time. Granted, the inverse correlation between unemployment and CPI inflation is basically non-existent now. It's how the Fed conducts policy. And so it does seem like the bond market is a little bit mispriced. I think, 450 on twos is definitely reasonable. We could begin approaching that. That's my outlook. I certainly agree with you on the majority of it. I am definitely uncertain as to it. Just, it's still something I've been thinking about. Why on earth was the bid 3 weeks ago down 87 basis points in one day on twos? Why did that happen? What did the bond market see? Did it see that they're following this blow up in regional banks, something way more fragile and under the surface exploded, and so everyone's rushing to safety? Did the bond market see that? Well, the fact that it sold off from its lows back up 50 basis points to suggest that wasn't the case and that it was a knee-jerk reaction. But either way, very strange market action.
Two things to think about as you're trying to analyze these moves. And number one, I think it's important to focus on how much signal is really there or how much of it is noise in the short term, right? Short-term moves. And I think there's a lot of noise in short-term moves. That's just my view. But I think number two is that you've had a whole generation of traders and money managers
Mhm.
who, whenever there's the slightest bit of economic turmoil or financial instability, what have they been met with? They've been met with the Fed cutting rates. They just reflexively believe the Fed's going to come in and cut rates, and that's going to save the day. And everybody I know that I talk to that is an institutional manager of money, that is still their belief. I mean, the whole trope about, the Fed is going to hike until they break something, and then they're going to stop, and then they're going to immediately cut. That is pervasive. Again, that is the narrative that is just capturing our entire zeitgeist. Okay, that they're gonna pivot. They're gonna pivot. It's coming. It's coming any day now. But what I think they have adopted as their strategy now is that, again, financial stability over here, monetary policy over here. We're going to try and separate the two, and we're going to try to do this, this juggling act between the two, a stop-start approach where we're going to help over here, but we're not going to help over here because we're serious about kicking inflation. That's important, and I think traders are still missing that. So that's number one, number two, I think. But I guess there's a third issue that I think that when you're looking at the bond moves in a short period of time, in a very uncertain, uneasy time, you have to remember what those moves signify. Ultimately, and I look at Eurodollar futures a lot. I know some people don't like that metric, but I happen to enjoy looking at Eurodollar futures. What they're showing is they're showing hedging activity. Okay. Hedging activity doesn't necessarily mean that, the train's about to come off the tracks and all hell's about to break loose. Hedging activity would be expected in an environment where there's a ton of uncertainty. We don't know how far the Fed's going to go. We don't know if they've already gone too far. We don't know how well the data is going to hold up. We think this can reverse on a dime if certain conditions are met. So we're going to put hedges on. And it doesn't, there's a Jeff Snyder who I think we both follow. He talks about this all the time. He's like, you can't take the curves at face value in the Eurodollar market. You can't say like, well, because Eurodollars are pricing at XYZ, that this means X amount of cuts. What you can take is that there are major money managers that are hedging, and they're concerned that something has broken or is likely to break if we continue on our given trajectory. But I will tell you that at various different points over the last year, the bond market has simply been wrong on how it's priced things. You can make that case very clearly that, a year ago, some of the curves and some of the inversions we were seeing were just flat out wrong, given the time frame and the data we have on the ground right now. So again, I wouldn't read too much into the day-to-day movements. I think you need to look at fundamentally the typical cycle. What is going to roll over. Michael Cantro, who I follow on Twitter, I think he's generally has a pretty good outlook on some of this stuff. He talks about, housing really needs to be at the front line. Housing there should be signs in the housing market of slowing down and really falling off a cliff, to be honest, before I expect the rest of the link in the chain to start to, filter on through to labor. And unemployment is going to be the last one to fall, right? We know that will be the last real. When unemployment's rising really rapidly, that the recession's on our doorsteps.
Absolutely. There's a chain of events that occurs. The Fed has its hands on the reins for now with these various liquidity facilities, and eventually you'll begin to see it flow through more materially into the real economy. Joe, excellent dialogue on not just the legal side of things, but also the market side of things. Any closing thoughts, whether it's on the legal side or on the market side?
I'll give you both. Okay. So on the legal side, again, we talked a lot about the litigation today, but I strongly suggest everybody go out there and review some of the public information that is available on this operation. Chokepoint 2.0. Again, hat tip to Nick Carter. I'm going to credit him on that because I think it's a perfect moniker for what you should call this, because that's what it is. And in particular, if you Google Cooper and Kirk, and Chokepoint 2.0, you'll see a report that pops up. Okay. This report is essential reading. This is a firm that's, white shoe firm that has argued cases and won cases in front of the the U.S. Supreme Court and various different state Supreme Courts. Their firm going out on a limb here and accusing effectively unlawful and unconstitutional actions against the crypto industry, I think is a great read. A lot of great citations. It's a very well written and thoroughly researched. So go read that. Spend your time on that. Read it again. It's worth your read this weekend. And along the crypto enforcement front, again, I expect more actions regarding banking entities that partner with exchanges on the way. That you may not hear lawsuits filed, but that doesn't mean there isn't material changes in the crypto industry given the efforts of regulators. The second thing from the macro front, okay, what I'm looking at very closely is next week we're going to get some labor data, right, Joe? I think, let me get the date right. I think it is on, yes, you get ADP on the 5th, and then you get initial jobless claims on the 6th. Again, labor is the core of this issue. Can these hikes, are they actually going to amount to an uptick in initial jobless claims? If you see that, I think that is one more indication that we're getting closer to a recession or a contraction than people might realize. So, but if we don't have that labor data, I think the the narrative of no landing or whatever they're saying these days is probably going to continue for some time.
Very well said, Joe. I've had my eye on initial jobless claims. Keeping an eye on it religiously towards the end of last year, and I waned off of it a little bit, just waiting to see that uptick and the pass through of tight credit. We'll get it eventually, and well said, Joe. I'll certainly keep my eye on it as well. Thanks again, man. Where can people find you before we sign off?
I'm all over Twitter. You just at Joe Carlasare, you'll find me. And again, I have to say, if you have a litigated dispute, I love doing litigated disputes all over crypto. I represent minors, business disputes, contractual disputes, breach of fiduciary duty claims, negligence claims. I'm not an ambulance chaser. I don't do much PI work. But if it's a commercial dispute among parties, or a securities issue, we have partners and colleagues that work on those regularly in the crypto space, and I work with them very closely given my expertise in the crypto industry. So I'm happy to help represent you or do an informal consultation. If you Google my name, you'll find my firm's website, and there's no charge to give me a ring and talk about a prospective case and see if I might be able to help you. And if I can help you, I guarantee you I know someone that's in the crypto industry or crypto legal industry that can help you. So feel free to reach out. And it's always good to hear from people that are trying to build in the space.
Fantastic. Hey, Brian Armstrong, if you're listening, you heard all that. You know who to call. Joe, thanks so much again. Everyone follow him on Twitter, and take care, guys. See you soon. And again, a special thanks to Passport for sponsoring this video. Foundation Devices is a fantastic company, and they make an extremely beautiful device. As you can see here, it is an absolutely remarkable piece of work. It is the best-in-class design for a Bitcoin hardware wallet. And if you have been on the fence about taking your Bitcoin into self-custody, now's the time. Not only are you getting a sweet deal, but this is the best device on the market for ease of use and easily putting your Bitcoin into cold storage if you've been on the fence. You can use code BitcoinLayer at checkout. You can go to thebitcoinlayer.com/foundation or use the link in our description. Take care, guys.